Hello and welcome back to Game of Trades. My name is Peter and today's video is going to be focusing on Bitcoin. In the last video that we posted on Bitcoin, we talked about Bitcoin being at this confluence of support right here. That was price channel support right here from this entire price channel that we've been looking at ever since November right here with all these reactions along the way. And this trendline support capturing these reactions, one here, here, and another one right there. But following another comment from Elon Musk, we did have that final shakeout that we talked about in this video where Bitcoin broke down below these levels of support and is currently making its way down to this level of support right here, corresponding to that January peak we saw right here. So what's next for Bitcoin? That's exactly what we're going to cover in this video. So without further ado, let's get right into it. So in the last video, we had a lot of comments asking about a head and shoulder pattern on Bitcoin. Let's take a look at the 8-hour chart here. So indeed, there is a nice head and shoulder pattern right there with one shoulder right here, the head, and another shoulder with a very well-defined neckline here. And now we have a solid break of that pattern. Now, is that something that we should worry about? Head and shoulder patterns tend to be reversal patterns, right? For example, we had one in 2008 right before the financial crisis, before a 60% drop in stocks. Now, the way you typically deal with head and shoulder patterns is you take the length of the head right here all the way to the neckline, and that can actually correspond to the measured target from that break of the trend line. So you take that measurement, you paste it to that break, and you get your target. That would take us down to these levels of support at $29,000, which would correspond to a 34% drop from current levels. Is that something that we're currently expecting on Bitcoin? Absolutely not. Now, even when you have these kinds of patterns form and even break, you have to ask yourself if that corresponds to the overall fundamental picture. And that's exactly what we do on gameoftrades.net. We take into account the technical picture and the fundamental picture when making our investment and trading decisions. So why would a 35% drop from current levels not correspond to the overall fundamental picture? The main reason for that can be found on this stock to flow model. It's based on the 4-year cycle on Bitcoin. And this is what the entire cycle is based around. It's based around the halving cycle that occurs every 4 years that diminishes the inflow of Bitcoins and naturally pushes the price higher, right? You've got this stock to flow model measuring, giving price predictions based on that halving cycle, right? Every 4 years, you've got a rise in the stock to flow model. And you can see you've got color coding here telling you exactly where we are in that cycle relative to the date of the halving, which I believe was in May 2020. So you can see we're around 1,100 days away from the next halving. We're in that yellow section right there. Now, if we take a look at the two previous bull markets right here, you can see the yellow section tends to correspond to the middle of the Bitcoin bull market, right? In 2017, it was right here in the middle of that uptrend. And in 2013, it was right here after that big first blow off top. You had a retest of that stock to flow model line right in the middle of the cycle. So a 35% drop down to 30K would be a 55% drawdown from the all-time high. That's just not something that we expect. We're still in a bull market, although it may seem like the end of the world. Sentiment is starting to get really bearish. We do still expect more upside on Bitcoin. And we knew from the start that we were going to get some difficult situations during this bull market. And I'm going to show you exactly what I mean. Let's go to 2017 on this chart right here and take a look at what these corrections look like without having the full picture, right? Let's put a replay on this correction, for example, right before we got that green candle. You can see how violent that drop looked back in 2017, where price dropped from $3,000 all the way to below $2,000 before eventually bottoming and then rallying back up to $20,000. So you really should keep that longer term view in mind and not be affected by the bearish sentiment that's currently starting to rise on Bitcoin. This is one of the most volatile assets out there, and you need to be able to endure volatility to take advantage of the upside. So the more red you see on that screen, the more you should be thinking about buying. And that's exactly what we're doing on gameoftrades.net, posting multiple articles about potential areas of support. On gameoftrades.net, posting multiple articles about accumulation opportunities at important support levels. So now that we've got that out of the way, we don't expect another 35% drop. What kind of price action could we have in the next few weeks? And one thing we're looking at is the 200-day moving average right here. And price is starting to get really close to that moving average. Now, this is something that we haven't tagged since May 2020. So right around the 2020 halving. And in fact, this is not a moving average that we tagged in 2017 either. If we zoom out and take a look at the previous bull market, you can see it's not a typical level of support. The corrections in Bitcoin don't typically come back to the 200-day moving average. So why are we looking at that? Because if we zoom out back to that previous bull market in 2012 to 2014, you'll see right after that big blow off top, the price came back down to that 200-day moving average. So we know that during a bull market, right, which is where we are, remember that stock to flow model telling us that we're in the middle of the bull market, similar to July and August 2013. Well, if we look at the price of Bitcoin throughout that period, in July 2013, we tested that moving average twice. And you can see the buying power on that test is just phenomenal. You have a very strong resumption of support. Now you can see we didn't get straight back to the all-time high. We actually grinded around that 200-day moving average for a while before picking back up the speed. So that's something that we could actually see on Bitcoin in 2021. If Bitcoin continues its way down, and it looks like that's exactly what it's about to do, if it continues its way down to the 200-day moving average, we expect a very, very strong resumption of support and potentially a break back above this trend line. And that would make this a bear trap, and that would strengthen the technical picture, right? We've got a lot of damage in the technicals right now. We're getting a lot of breakdowns below price channel support, trend line support. So this type of move would reaffirm that we're still in that bull market. And similar to 2013, we could test that 200-day moving average for a while before eventually reaching the all-time high. Right now, that's our preferred scenario. We've had a lot of technical damage on the chart, so we don't think there's going to be any big reversal until we see a tag of a very important support level, and that's going to be that 200-day moving average. And we find it unlikely that we're going to get a big V-shape recovery after that tag. It's more likely that we'll get a gradual improvement of the technicals and picking back up the speed to the upside. Now, one more thing I want to quickly cover is the spent output profit ratio on Bitcoin that's still in the negative. So we had that negative reading the other day. We covered that on the YouTube video, and we're still hovering in that negative zone. So this is very bullish stuff in terms of buying the dip. You don't often get a lot of these readings below 1 during a bull market, and when you do, they're typically great buying opportunities. Now again, make sure to check out gameoftrades.net if you want to have access to more analysis on Bitcoin with specific targets for buy zones, and follow us every step of the way throughout this bull market. Over the past couple of years, we've really done a great job to go through and find the best possible data there is on Bitcoin, the best indicators with the highest predictive value to take advantage of this bull market in the best way possible. So again, don't hesitate to grab a free trial and test out our service. Now, that's about all I wanted to cover in this episode. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading, and see you next time.